Good morning and welcome to the Killik podcast for Friday 29th of May. This week's been about Southern Europe, so we've had Greece back in the headlines and looking to do a deal with the IMF in terms of funding. That is, at the moment, the market's relatively complacent about that, and we've seen 10-year yields fall in Greece over the week. But we have to look at the broader picture and remain aware that at some stage there could be a fairly real possibility of a Greek exit or some sort of capital controls, because we continue to see GDP numbers deteriorate, economic sentiment deteriorate, and bank deposits continue to leave the country. So that's an unsustainable situation. We've also got a governing party that is anti-bailout terms. So we still need compromise. We haven't seen that yet. In Spain, the IBEX 35 fell fairly sharply on Tuesday when we came back from the bank holiday weekend. And that was on some very poor results in terms of the ruling party, the Popular Party in Spain, in the regional elections. And that's raised the market's concern about anti-austerity policies in Southern Europe. In the US, we continue to see some US dollar strength, which is there's been a marked reversal, having seen strong dollar, then a big pullback over the last month or so. It's now back on the uptrend, up around 4% over the last couple of weeks on a trade-weighted basis. That's supported by some quite strong data in the US, particularly home sales, which were up 6% in April. That leads us on to Wolsey, which is one of our stocks and reporting on Tuesday. Here we've got a chart showing the remarkable correlation between US home sales and the Wolsey share price. Clearly, they're not just about the US, and we've seen UK home sales start to rebound quite strongly, but they're still around 40% below where they got to in 2007, so a lot of upside there. And Europe, taking France as a proxy, they're still around 45%. Below 2007 peaks. So, there's big scope for volume increases or top line increases for Wolsey. Also, in terms of the P&L, we see continued consolidation in the industry, which has got the potential to increase margins as they consume more smaller companies, more fragmented businesses within the industry, and start using their better margins to drive better service, better supply chain logistics, better internet to their customers, etc. They're also a big beneficiary of a stronger US dollar. So there's a lot of reasons why we like Wolsey at the moment, and we think the rating looks pretty reasonable. Other stocks reporting throughout the week. Well, as you can see, next week is pretty light. Wolsey is the only Killik & Co recommendation on that list, but we've got Johnson Matthey on Thursday, quite a big one. Halfords will be interesting on Friday. Just looking at what else has been going on this week, we've seen a couple of quite big M&A announcements, and M&A is now back to pre-crisis levels in the US. So, this week we've seen Charter announce a bid for Time Warner Cable. Clearly, Comcast deal fell apart over the last couple of weeks, so Charter have come in. And we also seen Avago Technologies put a bid in for Broadcom. Both are reassuring because they're both themes that we're really interested in getting into portfolios. So Time Warner bid just reinforces our confidence about margin growth potential in cable in the US and in the UK for that matter, and convergence with mobile. So we saw a strong share price in Vodafone over the week, and we saw Liberty chairman John Malone continue to highlight what he saw were some pretty compelling synergies between the two companies. So here you can see the Liberty Global share price and Vodafone there. Avago Technologies are going to pay 19 times for Broadcom. Avago is a really interesting company. Only 2 years ago, it's doing around $2.5 billion of revenue. They're now, post this Broadcom deal, forecast to do around $15 billion. So their growth has been quite incredible. And here you can see the Philadelphia Semi-conductor exchange. So this is against the S&P, and you can see a very marked outperformance since sort of October 2014. And this is about people getting more interested in the Internet of Things and the positioning of companies within the Internet of Things. So we've seen an awful lot of M&A in this area, and this is just another example of that. So just reminding ourselves quickly of the revenue opportunity of the Internet of Things. If we go back to New product cycles. We saw PC in 1990s, so 100 million units was around the market size. Desktop in the 2000, 1 billion units. Mobile internet in 2010, in around 10 billion units. But the Internet of Things dwarfs all of those product cycles. So in the sort of 2020s, we can see tens of billions of units in the Internet of Things being sold. So, it's an area that the market wants to be prepared for, and we're seeing some really good share price movements in the hardware companies in this space, and they've been the first beneficiaries as the globe tools up for the Internet of Things, particularly in the mid-cap space in the UK. So we've seen CSR and being bought by Qualcomm, and we've got Killik Communications, which has been performing very well. Outside of that, there are many applications for the Internet of Things. We're also seeing, in stocks that we hold in portfolios, technology companies building their Internet of Things platform. I think it's interesting to look at the US Apple Watch demand. So we've seen a 60% increase in expectations for sales since March, and suggesting they can do around 50 million units of sales in this device. And that's going to be a great hub for data for Apple going forward. So again, one to watch out for this space, and a key theme for us. Thanks for watching. Have a good weekend.